We have a question in the audience.
Yeah, cybersecurity. I looked into that for my little company and it was expensive, very expensive. So, I mean, I understand risk management, but it's like I already have all kinds of insurance. And cybersecurity is just another little sucker that I feel like booting down the road and running over and all that kind of stuff. But I don't want to spend money for it.
So I have found for clients that want cybersecurity, many grants are willing to pay for that. So if you say, I want to make sure, we are now getting big funds in, I want to make sure that we're covered with these different things going on. Grants will often pay for that. Don't be afraid to ask for them to cover insurance or to cover. Yep. Single audit. You're getting big grants. I have clients that they were going to be getting a single audit and they'll be getting one for 2025. I said, you're submitting grants now, build it into your 2024 to, like Greg said, do a trial run, do an audit, find out where you're lacking, build it in. A lot of my clients are able to build in my costs because I can tell them these more specific grants that you're getting require accounting support. And so you can build in the fees to have a contractor help you with that. So I've had luck with clients having that paid for. Some grants have actually insisted on you having that type of insurance.
So now we're coming to the really, really exciting part of the day. And that is where we want to hear from the folks in the room, whether they're speakers, whether they're here in attendance, and also from our virtual audience as well. We have been working for the past couple of years in this world where there's been funding for local capacity. People talk about capacity a lot. What does that mean? We sent out a short 4-question survey that a lot of you responded to. So thank you for that. It allows us to get to know you all a little bit more. But we asked, what does capacity mean to you as an organization? And here you see Diane's mind map of the responses that we got. What I look at this and what I see is we need a lot of everything. We're looking at lots of different areas. I look at the responses that we did get to the surveys. People spoke a lot about budgeting, budgeting and grant tracking, simplifying systems, another budgeting, keeping track, comparing actuals to proposed budgets. That can be pretty challenging. Budgeting and grant tracking. So I think we've got a lot of questions that are going to be coming your way, Hillary. But now we will be moving around the room with the microphones. Folks, raise your hand in the virtual room, and let's just take advantage of the expertise that we have here in the room. I do want to share that the Nonprofit Insurance Alliance, the Alliance for Nonprofit Insurance, have been really helpful to me. We found ourselves going from, okay, make sure we have directors and officers coverage. Let's make sure we have general liability. So all these people partying at the conference, we know we can handle that. All right, but now we're working with a homeowners association that's doing wildfire mitigation, and people want to see insurance certificates all over the place. Are we covered? Do we have what we need? And the Nonprofit Insurance Alliance has been really, really helpful with that. So we do have coffee and beverages in the room. Of course, please, make yourselves comfortable, but let's settle into a bit of a conversation here.
I could just say one thing. It's not really for the people in the room. It's more for our friends on Zoom. We do have a whiteboard on that you can add your ideas, your questions and whatnot. And we'll be adding in the questions and responses that we get in the room as well.
So again, and we're going to be taking notes, comparing notes. And before we leave here today, what we hope to have is something of a roadmap going forward. Let's say we were to have 2 or 3 follow-up meetings or conferences, or get more specific and really get into detail. What what's the rough outline of that going to look like? What should we prioritize? What resources do we need to call on? So again, we were asking the question in the survey, what does capacity mean to you? We asked the folks to describe their organization a little bit. Greg talked about using a fiscal agent. Well, that's kind of interesting. A lot of people spend a great deal of time playing corporation when maybe there's a relationship that they could develop with an existing nonprofit organization whose role and mission is very congruent with what it is that you're trying to accomplish. Partner with that fiscal agent, let them worry about the 990 and the other filing requirements, Secretary of State filing requirements, you name it, and focus your passion and your energies on the project. Be the champion for what you want to have done, and then you don't have to worry as much who's the president, who's the secretary, who's the vice president, treasurer, that sort of thing. So maybe exploring fiscal agency a little bit is maybe as an organization, you could be a fiscal agent for an activity that needs to be accomplished. There's a group of people that are ready and willing to do it. They don't want to deal with all of the hierarchical paperwork, administrative work, and they just want a fiscal agent. You can charge a fee for that. It's in your role and mission, and there you go. So Colorado Watershed Assembly does that frequently, and it works really well for us. So. Trust currency. That's something that you talked about, Greg. I have heard collaboration grows at the speed of trust. That was our keynote speaker last year, Ernest House, shared that with us, and that stuck.
Yeah, I think with me and like the work that I do, and I usually fall till spring, I go and do my road show around the state. And then I see tons of people that I've seen, maybe I haven't seen in a year, and they just hear about me. And often when I start a project with someone, it's like, oh, well, you were here 3 years ago, and then we thought about it, and then we thought about it more, and then last year we were going to do it. Now we're ready. And it takes a lot of time, and a lot of in-person meeting, especially with the group that I work with. You got to do everything. I mean, for me, I don't know if it's the same for you all, but I know for me, driving 2 hours to go meet 5 people in a barn and driving 2 hours back is actually a really good use of my time, because that could end up, it's like, okay, we need to talk about this reservoir we have to fix. All right, we'll do that. That means a lot to these people, especially because not a lot of other people are willing to do that. And so I think that's been really valuable for me.
And I have my hand up in the room. Greg, can you guys hear me? Can you guys hear me in the regular live room? This is Diane.
Yes, we can, Dan.
I put that up there because, Greg, I really resonated with that when you said it in your presentation. I work a lot in mining country, and I call it the valley of death, when you're trying to get a project off the ground and it takes 3 years to get stakeholder engagement and buy-in and everything that it takes up front to even start pursuing money, to get a scope of work. And over the years, it has been critical to show up and be present in the communities and hearing, in listening to their needs. And I wanted to reiterate that because whether it's the ag community, the mining community, or another community, a project will not get off the ground. And if you haven't figured out who the stakeholders are, it can get squashed. You're a year in and then realize that you left out a critical stakeholder, and they can basically say no. And I don't know who else has had that type of experience, but that's big.
Thanks, Diane. Thanks for reminding us about that. The time that it takes to invest up front before you're even ready to apply for grant funding. That's, to me, what you need the capacity for. You need the ability to do that kind of outreach. Ken, I believe that you have a question?
Thank you. You don't all know me. I'm Ken Brenner. I do a lot of work with water policy stuff, but I'm on a new group up in Northwest Colorado and Southwestern Wyoming. And I wanted to kind of dovetail with what you were just talking about, the structure that you use as you move forward. You know, we're still this is our 1-year anniversary. We do have a big retreat at the end of the month. But this is all the state and federal organizations, agencies, local governments. We have like over 40 partners already because we're building on the success of previous work. So my question is, or my comment is, that the thing that we're struggling with right now, this will be one of our main topics at the retreat, is to whether to continue the relationship that we have today, where we're receiving hundreds of thousands of dollars in grants, even millions of dollars, and paying the indirect versus going ahead and forming our own 501c3. There's a lot of, obviously, from what we've learned this morning, there's a lot of responsibility that goes with managing your own entity. But I also come from a background of local government. So you really have that responsibility to, you know, be ready for a federal audit, to be prepared and not be trusting or counting on other groups. So the big question we're wrestling with is, you know, should we pay the 15 or 20% indirect to get the support that we need for doing that versus trying to form our own organization? So that's the main reason I came here today. And I just wanted to build on what you said. I think that's a really important, relevant topic, and there's a lot of layers in it. So that would be very helpful in the future.
Ken, yes, go ahead.
I don't think I have a good answer, but I'd like to chat about an example just that we're undergoing. My name is Melanie Smith. I'm with the Eagle River Coalition. We're the local nonprofit group here in the Eagle River Valley. And we used to be called the Eagle River Watershed Council. And actually, this is kind of what I'm speaking to. We rebranded in March because we felt that Watershed Council was a different relationship with the community than coalition kind of expressed. We're a staff of 4.5 or 5 sometimes. But we were actually in 2019, we were approached by a private donor, and we were asked the question, I've heard about the Yampa River Fund. How come the Eagle River Fund doesn't exist? And this private donor was kind of a unicorn that came to us. It's probably something that you can't exactly count on in a million years. But we were kind of like, well, we don't really know. Maybe we should explore this. And so we did. And then the pandemic happened. And so it kind of sat on the wayside. What emerged, though, because this was happening concurrently to our local community water plan, was that we already had this group of 40+ stakeholders that were convening regularly to create the water plan. And so we said, well, maybe we should pose this. And so that donor funded a feasibility study, and the decision was made to move forward. And since the Watershed Council at the time was the group that was seen as, because of a reputation that happened because of the mine spill up in Gilman, if you're here and you've driven up 24, you'll see it. There's in the 80s, there was a mine spill. There's the trust currency that that Greg spoke about. It goes 2 ways. And so we dove into the coalition aspect of the collaboration and the trust that we had in the community, because we had overseen the mine cleanup, and we were seen as the singular group committed to the care of the local waterways. And so we were tasked with the kind of launch of this fund that would take word from all of these 40 stakeholders to create this fund. It's taken a long time and we're still not there, but those donors have pledged generously 20%. And so we have to seek an additional 4 million. So it's no joke. But our little board of directors said, you know, we're not really in the business of trying to manage this kind of money. And so we approached a couple of different community foundations, and we ultimately did decide it's not exactly a fiscal sponsor or anything, but this is a long-term field of interest fund, essentially an endowment that will live at the Western Colorado Community Foundation. and it is launched. And its goal is to give the 40 groups that were part of the stakeholder group funding to expedite and create efficiencies to do more work. So it's not just coming to us. It's not a restricted fund exactly. It'll be a grant process. And so we're still very early in this, but it does seem a little bit different than the typical funding mechanisms. We're seeking funding, we're seeking funding from foundations, from individual donors, from collaborations. There's already municipalities in the talks. And we've expedited a couple of different projects already so that we can have a track record and build trust with some of the groups. It's really confusing to run because who's actually managing this? Who's creating the grant process? And so we're muddling our way through as well. But our governance structure was to piggyback on work already done, use our reputation as a nonprofit group that's focused on purely being the voice of the local waterways here in the headwaters, and then creating efficient mechanisms for other groups to also do that kind of work because it's all about the mission. So it's very confusing to say that this isn't our work, but it's another group's. That I think that this is an example of capacity building toward a mission. It's not capacity building toward an organization, though.
What brings to mind for me is the Healthy Rivers Fund and the experience that we've had with the Healthy Rivers Fund. So we'd be happy to talk with you about that. Diane's program manager of that. But yeah, there's a lot of spreadsheets involved with that. Hillary, I wonder if you could kind of speak to what we've just heard and what you experience, what you've seen.
So I do feel a fiscal sponsor or that type of relationship with a community foundation or organization similar is a great place to start. There's no, in my mind, there's no qualm with starting there, dealing with that 15-20%, because when you are out on your own as a 501c3, I would say imagine it's 20 to 30% that you're going to be spending on that administrative operating it. Now you have to get more resources. You're going to have that cost either way. So I always think I just do the same with like foundations. I don't think a private foundation should be formed until they have at least $1 million, because a donor foundation, like a donor fund at a larger foundation will suffice. So similarly, nonprofits, if you can do the work through a fiscal sponsor, until I would say you hit that, you think you're going to have over $150,000, $200,000 a year, I don't think it makes a ton of sense to go out and do it on your own, because the costs I think are too high. So that's I think there is like a number threshold of above 200,000. You got this. You can go out, you can do it on your own. You can afford to, but yeah, the $800 filing fee for a 1023 to become a 501c3. Then you have your reporting. You're going to need an accountant. You're going to need software. There's just a lot to it that you can accomplish at the lower levels.
But wouldn't we be, if we were to pass that threshold and decide that we wanted to do that, we would be relying on people like yourself, not as a board hiring and trying to train people, but using existing resources.
Yeah. And that's, I think that's where I saw this need. So when I was at Eide Bailey for a number of years, which is a large accounting firm. We didn't work with organizations unless they were above 10 million in revenue a year. And so the number of organizations, these big CPA firms, they won't work with you unless you're over 5 million or 10 million. So I saw this huge need for organizations that will work with these startups, with nonprofits that are boots on the ground, one employee or one independent contractor that is totally not an employee. So it's just, there is a definitely a need for that type of like contracting work if you're going to go that route and go on your own, because you don't want to end up in a place where you get that major grant and you're not prepared for the reporting and your books aren't in order.
I would just add, I agree with what Hillary said, that there is a business line that makes for smart decision making on the cost versus what you take on versus what's covered. But I also think about the steering committee that I'm on. It's a steering committee and not a board. in this case, because there's a fiscal agent involved. And so the governing body for this project doesn't necessarily have fiscal responsibility from a tax perspective, but they do have governing from a programmatic and strategic perspective. And so it makes me think about culture of your organization. And in that particular organization of the steering committee example, the employees are still governed by HR policy of the parent or entity. And so we have to think about, well, what does that mean for their travel policy versus the travel policy that we would want? Or there's just some details like that. And I think that you can still go be a 501c, an independent 501c3, and just have a great set of consultants that are your 1099s that also eliminate some of those overhead costs that you're not paying payroll taxes and those other expenses, which unfortunately puts that on Greg's shoulders instead.
Hi, I just want to add to that a little bit. So sometimes there is an advantage to going ahead and incorporating as a 501c3 rather, and still keep the fiscal agent, but at least get established it. And one of that, and I'm just pointing this out because it has to do with statutory authorities. So this $100 million we received, and we're still getting $10 to $15 million a year in appropriations. It literally can only go to watershed groups. And so a lot of watershed groups have been reluctant to establish themselves as a formal corporation, but that is the only gateway we have to giving that funding away. So it doesn't have to be like a fully functioning, fledged out watershed group, but you do need to be incorporated. You need to be able to get a SAM.gov registration, establish an ASAP account, all those sorts of things. So there is kind of sometimes it may make sense to do something like that and take on those costs maybe before you're really willing to take on full administration. And we'll pay for it in our grant.
Well, thank you, Irene.
And what's a typical turnaround on a grant application like that?
Selection process and that is usually about 5 months. And then another, 4 to 5 months for the grant is usually, just because right now they're drowning in bill funding, reclamation, in addition to like more than $1 billion for just the water smart programs. They have a whole other $1 billion in for other programs. So there's a little bit of a pinch point.
But hearing what you guys are talking about, a nonprofit is still a business. And I think probably one of the best things I did is when I started my business, I decided to go hire me an attorney. I hired an accounting firm. And of course, I have a good relationship with the bank. And the thing about a lot of small companies, when they want to start out, they're going to do their own accounting. And my job is buy seed, sell seed, hire people, train people, work with the end user. That's my expertise. And a lot of you as nonprofits, you have a certain expertise and a certain goal. And you can concentrate on that, knowing you have professionals doing those other things. If I need some legal assistance, I have an attorney that's there. Call him up, talk to him, guidance. But an accountant, you got to have that monthly. And you can have your financials and review it with your accountant. You know where you're at all the time. Anyway, just a few things.
Thanks, Don. It's money well spent, if you ask me. I want to make one comment. There are some things coming up on the board about engaging your board with your financial statements. Hillary, I liked your short and sweet presentation. One of the things that I do enjoy bookkeeping and accounting, and one of my favorite board meetings is when we go over the 990 because so many people focus on the income statement. They're looking at what's coming in from operations, what are our expenses? Oh my gosh, the burn rate. I don't like that term, but that sort of thing. They're so focused on the operating statements, the profit and loss. The balance sheet is just like an afterthought. And the balance sheet is a really important document for your board to understand. It's the one thing you can actually verify, which is, makes it an interesting element of your financial reporting. but you know how much money's in the bank. You know what your assets are. But when we go over the 990, some people start kind of dozing off a little bit. But when we get to the question about, do you operate an indoor tanning salon? Then they wake up again and we get to go back to answering the 3 pages worth of yes and no questions. Okay, go ahead, Julie.
I was just gonna share our example. I'm a one paid employee watershed partnership, but I have a really great board, and we have a partner organization. I'll call it a parent company, Coalitions and Collaboratives. So we are a 501c3. We do, I'll say, 3/4 to 80% of everything standalone by ourselves. But I am an employee of Coalitions and Collaboratives, and they run our payroll, and they do all those other taxes related to payroll. And they run my benefits and things like that. And we're actually just diving into the conversation of how does our organization graduate from being under Coalitions and Collaboratives, and we're fully standalone. And some months we're like, yeah, we're ready. And then we have another conversation and it's like, ooh, we actually really like still being under Coalitions and Collaboratives. But to me, it's a very comfortable. They're supporting us. We have been ticking off a variety of things over the last few years and taking steps towards graduation anyways. But to me, feels very comfortable and safe and well supported, and they have expertise. But we do like being a 501c3 and just seeing how far we can get on our own.
Coalitions and Collaboratives is a great organization founded by the woman who founded the Colorado Watershed Assembly. So we do, Carol Acarius was her name, and she is just a great visionary and willing to share. And just, she was just out there. She was everywhere. She was one of those people, as Greg mentioned, who's driving 3 hours to spend 2 hours in a room with 5 people. But her impact was enormous. I want to give a plug for our payroll company. We use Copac, and that has saved me so much time. I still need to allocate hours and do that, but I get the reports. I don't have to worry about it. It takes me, we're small staff, but it might take me 5 minutes, and we get the payroll done. I get my reports. There's somebody that picks up the phone when I call, and it's usually Lisa, and we have a nice chat. Copac, great payroll company. You do not have to do that kind of stuff yourself. You need to know what it's about, and you need to know that it needs to be done. But get help, ask for help. It's out there.
I also just wanted to share with everyone, we do have someone in the chat, Danielle from the San Juan Watershed Environmental Program. Not 100%.
Enhancement Partnership.
Partnership. Thank you. I did look it up and I forgot it right away. They just recently made the transition from using fiscal agents to becoming a 501c3, and she'd be happy to kind of talk to anyone who's thinking about making that transition. And as part of like our post-workshop survey, we will, if y'all are okay with it, we'll share everyone's contact information so you can start making those connections. That was Danielle from San Juan Watershed Enhancement
Partnership.
Thank you so much. So sorry about that.
Is Danielle on the, do you have your mic on? Maybe you could just chat with us for a minute or two. Tell us about your experience.
Sure, I'm here. I'll keep it brief. I'll echo that that kind of 200,000 to 300,000 K that someone had said to have as your in your reserves with grants and whatnot to have that startup does make sense. I'll say we probably did it with slightly less and started the process, and that's okay while we were seeking more funding, because the process took about 7 months, a little or more, waiting for the IRS. So if you're sitting there wondering, oh, should we pull pull the trigger and do this, do it, because it could take a really long time to hear back from the IRS. And so, and we actually did take advantage of the watershed, the Bureau of Reclamation watershed, Water Smart program, like CWMP is what I call it for short. And it's a wonderful program. I can't say enough great things about it, where they do pay for, watershed organization startup. It's awesome. And we did use in kind as our non-federal. It didn't require a contribution, but we do have in kind hours, volunteer hours, and lots of them. So I would say that what we did was, instead of going at our community foundation, local community foundation, we had different fiscal sponsors, like some other larger nonprofits, NGOs and municipalities on specific grants that were our fiscal sponsors for projects and for general operating costs. And then again, working in tandem with getting it, and we're a new organization. We incorporated my gosh, July of 23, and turned in the application for our nonprofit in January of 24. So, and we did that with about 300,000 in the bank for general ops, from a foundation and the Bureau of Reclamation. And on top of that, starting our first project. So hitting the ground running with and I'm the only, I'm a independent contractor coordinator. So and there's nobody else. So it can be done, and there's definitely growing pains for sure, but there's pros and cons to staying under that fiscal sponsorship. You don't get any of the indirect. You are it can be, growing pains with billing and sub awards. We've got sub awards for some of these, for all of them actually. So kind of working with a little bit more layers of bureaucracy when you have that fiscal sponsor. So I'm looking forward to applying for our first grant as a standalone.
Hi, I think it was your grants officer for your Water Smart grant back in the day. And I don't know if it's your group, but the thing I wanted to point out here is it's not a one and done with that Quant Phase 1. You can come back and get more funding at that same level. As long as you're progressing, right? So you're doing further design, further maybe expanding your watershed group. Maybe you don't do articles of incorporation that first go round, and you have your local water district is sponsoring you, but you may in the second one decide, hey, let's take the plunge and go ahead and do that. So it's not just a one and done type of thing, and just to kind of keep that in mind.
That's awesome to know.
And so this is Hillary. And I do think, there is something, I have seen organizations that, they're a 501c3 that only brings in $30,000 a year. It's doable. It's just, that's where I think sometimes at those lower, annual income levels, that's where sometimes if you have a good fiscal agent, you're getting the benefit, you're getting the resources. But yeah, there's no qualms with going out, getting the 501c3. The IRS is backed up, which is not a surprise to me, or I'm sure anyone. So I would expect, it sometimes can be as quick as 6 weeks. On a full 1023, it can be up to 6 months. So it is the date you file it, you get backdated. That's the date that you can start accepting grants and things. So it's the date of your application is when you become a 501c3 if they accept it. But yeah, there's no qualms with getting the 501c3, but don't be afraid of using a fiscal agent to start out. Yeah, it is, I've seen many programs that have started that way, and then they get the big funding and or have the potential for that funding. And that's when they're like, we'll go out on our own.
And just to clarify, you're saying that when the day that you apply and they accept your application, they don't approve it, but they accept it, is your effective date.
Yes, the date of your application, so the date that it has been submitted to the IRS, which has to be done electronically now, that is your 501c3 date, your date that they would go back to. So I have seen organizations, and the IRS guidelines do say that from that date you can operate in good faith of your 501c3 status. That is a little bit questionable in my mind, because what if something's wrong on the application? So I always tell people, even if you say, I can do this 1023 by myself, I can do my 990 by myself, I'm proud of you. Just like talking to my 3-year-old, like, good job. I love the independence. Have me look over it. Have someone review it, because you don't want to submit the 1023, operate in good faith, and then you missed a simple question. So I, just like with my clients that they don't have the funding to have a monthly accountant come in and do all their bookkeeping, do their payroll, do everything, there's still ways that you can find a contractor to fill that need. Hey, I'm going to do the 1023 on my own to save the $2,500. Would you mind looking over it for $400 or $500?
Oh, Hillary, I wish I would have had you.
I get
I-
that a lot.
I wish I would have. I had that expertise. I did it on my own and just tried to muddle it through. And after waiting the 7 months, they finally got back to me, and it was one question, and they just needed a clarification. And so I do echo, if you do have someone like Hillary, to just look it over, because the application itself really isn't that bad, but it was just a clarifying question. And thankfully, they did it quickly. I didn't have to wait another 6 months. It was like 2 weeks.
I highly recommend that with your 990 as well. I've done over 1,000 at this point. Oh, I love it. It's like storytelling in tax return form. And there's certain things where they want specific wording. Same with your grantors. They want specific wording. They want to see things done a specific way, where you can say it and I'm like, that is great. But what we're going to say, is the full board of directors reviews your 990 before filing. And I'm like, all you have to do is provide it to them. But if you say, oh yeah, my executive director reviews the Form 990 before we file it, that doesn't meet their qualification. So there's certain things where I come in and just say, oh, let's use this wording. Are you okay if that's your procedure? Your new procedure is you email it to the full board. That meets IRS qualification. So there's little things like that, questions that have to be answered a certain way to make them happy.
Kind of like if the menu is in Chinese and there are no pictures, you might want to get a translator.
Yeah.
So that it speaks the lingo. Jordana, I wanted to ask a question, kind of following up on a little bit earlier conversation. But when you and I were chatting, just getting to know one another, you mentioned board reserve. And I wonder if you could talk about board reserve a little bit, because we've talked about minimum thresholds for certain decision making, but please, board reserves.
Sure. And I think I shared an example of how we strategically achieved reaching our board reserves as a very small nonprofit. I think every nonprofit will be different in what their target number is, whether that's 3 months or 6 months or a year that they want to have as that kind of pot of money you can fall back on. The organization that this example comes from was about 10 years old. They had kind of struggled to even implement a board reserve policy. And they had $5,000 in it, and that wasn't going to get very far. And the organization was growing at the same time. So the size of the board reserve was changing. And so we decided to implement a new board policy where at the end of the fiscal year, when we close the books, 50% of any of the remaining profit would get swept into the board reserve until it reached that 6-month operating target. And so that was just a good strategy that this particular board put in place in order to hold ourselves accountable to the fiscal responsibilities. So
Curious, so is that something that's actually like a category that's called out on your balance sheet, or is it something that's more internal and you make note of it?
it is called out on our balance sheet now, and part of that previously it was called out on the balance sheet, but the pot of funds itself were still intermingled with all the other bank accounts. And this organization grew fast, started to bring in a lot of federal and state grants, started to carry a very large bank balance. And as part of our risk assessment that actually our auditors originally brought up to us, and with the issues, maybe that was 2 years ago with the bank run out in Silicon Valley, and just kind of opened everyone's eyes to what actually is insured in your banks. And this organization was carrying probably 3 or 4 times what would be insured. And so we decided we needed to start diversifying our banking and open additional accounts at other institutions in order to spread out that risk. And now the board reserve lives in one of those separate banks, and makes it even easier for it to be its own line item.
Can I build on that for a second? Okay, so one of the things that I have talked to clients about in terms of reserves and money sitting in their bank accounts is look for banks that can put your funding into a multi-bank network. So you can have an account where I had an organization that was over that, 250,000 Federal Reserve insurance limit. And they have accounts that it's actually a network of 11 banks. And what it does is they internally divide your funding between those 11 banks, and you have records of all those banks. This was through Citywide. And so they didn't have to have separate accounts at different institutions. Essentially, their funds internally through Citywide were diversified to make sure that all of their funds were insured. Second, on cash in your account. So with that number that I had up there earlier about that organization could operate 104 days. Well, I always say, 90 days of reserves. But my suggestion to organizations is you have 60 days worth of cash. Anything above that, put it in a money market. And once a month you do a transfer in, because right now money markets, you can get 4.5%. So I have organizations that their funding coming in is pretty much all restricted, all program based, but they're making $5,000 a month now because everything that they don't need in cash is making 4 or 5%. So have it in a money market. It's completely secured. You're not worrying about like your basis, because obviously preservation of your funds is key for a nonprofit. You're not trying to be risky, but put it in that investment money can go right into your reserves. So that this organization over the past 2 years has built up like 70,000 in reserves just from this unrestricted investment income by saying, let's not keep $600,000 account when we only need 50 to operate for 2 months.
And what was that percentage, did you say? Anything over, was it a certain percentage, or was it a days?
2 months of cash.
Got it.
And I have an additional question for you, Hillary. One organization that we work with receives a lot of federal grants, and they have gotten some funds up front rather than being reimbursable. And that money cannot be held in interest accruing accounts. And so that's the other thing that we're trying to figure out how to manage. Do you have recommendations on that?
So does that grant have a timeline for when those funds can be used? A couple years. Okay, so then yeah, you can't really put it in any interest-bearing account. I always say go back and ask the question. So say, can it be in an account? Can it be in a savings account that is earning a nominal rate where the funding is completely secured? Because what I think the nonprofit's trying to avoid, or the funder's trying to avoid, is you going and investing that in the market and then you losing principal, and now that money they granted for this program no longer can be used. So that's where I say if the principal is completely secured and it's a savings account, would that be possible? I always say ask. It doesn't hurt to ask. And if not, then I always go to that use the most restrictive first. So that falls into that. Okay, these funds are restricted. So even if it's like a 3-year grant, you know, let's say it's 1.5 million over 3 years and you have $500,000 to use each year. Well, those funds are more restricted. So if you have other funds that can be put into an investment bearing account and you can move those and use those funds first, that's what I would do.
So I'm going to do another follow-up with Jordana because I'm watching how the questions are coming up on the whiteboard. Thank you, Abby, for categorizing these. Again, we're looking for direction on where we might want to spend some more time with a follow-up workshop or a subsequent workshop. But I saw a note here saying we got 20% of the board doing 80% of the work. So how do you cheerlead? How the not take the finances out of the picture? There's that human element. This would all be really easy if it wasn't for people, right? So trying to encourage and engage and benefit from the board's involvement.
Yeah, and I think there's some variation there on the expectations of a board's workload based on the size and makeup of a board. Some of the really small nonprofit organizations that are very community-based and have one staff, there is probably a lot of expectation for the board to also show up and lift their own weight around some of those programs. Versus some of the very, very large national NGOs, those boards really are kind of function like booster clubs. To me, it's more interesting work to work with the smaller organizations where you actually get to roll up your sleeves and be a part of it. Now, how do you get people to realize that that's part of their responsibility? I think part of that comes from some of the formation of subcommittees and kind of being able to divide the labor on an annual basis as to who is on what subcommittee and kind of gives them some small assignments that don't feel too overwhelming or like they're too burdensome from a time commitment, but they give them small ways to start to engage, to learn what it means. And so I've seen some small fundraising committees that just help with planning the annual event. I've seen recruiting committees that are just out there in the community trying to find other people that want to engage with the organization. And so you can get creative about what types of committees you can form too. There is no legal definition of exactly what committees you have to have or can't have. There's some that you should around just your fiscal responsibility, but if you need a PR campaign, you can form a committee around that. And so there's some small bite-sized ways to get people more involved. I also think that as an executive director, spending time with your board is really important. Getting to know them as people and figuring out how to leverage them best and just building those one-on-one relationships really helps them start to create emotional buy-in into your success. And when they start to have that emotional buy-in, they start to show up a little bit more and engage as well.
Thank you, Jordana. And I know, Greg, you I remember from the days when you weren't really sure if you had a board of directors or not, or how much they liked you and that sort of thing. So I'd like you to talk about that, but I'd also like to spend a little bit of time talking about conservation districts and relationships with conservation districts and what's possible and how do you get there? Do you show up for their watershed meetings? Do you go to their meetings? How do you enter those rooms and get to know those folks?
Yeah, the conservation districts, I think in some ways they're very similar to the issues that like a lot of your watershed organizations are dealing with. I mean, you go across the state, there's over 50 conservation districts. You have some that are they are operating at a very high level. Maybe they have a mill levy, maybe they don't, maybe They have some source of income. They have multiple staff. They're pulling in millions of dollars of projects. You have a district where they get I think it's how much? I think it's like $7,000 that they get from the state, and they're operating on fumes, and they have a really hard time keeping a board. And there's a lot of those, and they have no mill levy. So, and I mean, you've got some small ones that do a lot of really good active stuff. There's one very large one that has millions of dollars, and all of us wonder what they do. We're not quite aware. Yeah. And so they're in all weird positions. And it's been interesting in like the 9 years I've been doing this job, seeing some of those districts where, I mean, there's one district I remember where they had this great person there for a year, and all of a sudden they're doing things and got into an issue with the board. They left, and now that district's back to doing nothing. That's fairly common. I mean, I've seen a few where they get the right person in there, and all of a sudden they're able to not just do more, but then also set up the internal infrastructure where if someone comes in behind them, it doesn't regress at all. And so meeting these groups, I mean, it's really getting to know the district managers of each of those districts, going to their annual meetings, because a lot of them, and for you'll find that the districts, I mean, they tend, some of them tend to be very, I guess, hardcore agriculture, and a bit hesitant around environmental organizations. And then you have some that are very much, okay, let's do something together. And so it's a real spectrum there. And getting to know them, it's just going to their annual meetings, working with them. Often, I mean, here's a group that is also looking for funding and capacity, and you might be able to help with that in some way. And so, but it's really, we've done some work, and what the districts have that I don't think Watershed, they have a few advantages that are really nice. One of our partners, Cattlemen's, they did a lot of polling, and what government entity do farmers and ranchers trust most? Their local conservation district above anything, even when they're not operating. And that, who knows, maybe that helped. But that more than anybody. And so, and their board is by statute is required to be landowners in that area. And so often you do get a lot of agricultural producers on those boards. The other is that they are a government entity, and they are, as you were mentioning about getting that 501c3 so you can get grants. There are amazing grant programs out there that a lot of people are not eligible for, but a soil conservation district is. And it's like sitting on gold in some ways, and they just don't realize it. So they've got some real capabilities that watershed organizations don't in that way. And it just, I mean, it's good knowing, I mean, they're dealing with a lot of other things too, though, whether it's wildfires, invasive grasses. I mean, I know one district that is their big thing is cheatgrass. I mean, they spend so much of their time on that. Another one has spent a ton of time on wild horses. So not exactly a watershed issue, but usually a lot of them, this is something that they deal with. They just have some of the same weaknesses that a watershed organization might, of just not a lot of capacity, not a lot of funding.
And so I would just like to contend that conservation districts are a lot like watershed organizations. They're the watershed groups of the 1930s. They were formed. The whole idea was born from the response to the Dust Bowl. And so these soil and water conservation districts, there's some argument, oh, should we call ourselves a soil and water conservation district? Or no, we don't want to use the word water. But there are some areas like the Rio Grande, the San Luis Valley, where watershed organizations created in the 1970s after the Clean Water Act, and the EPA wanted these 501c3s situated throughout the country to come up with watersheds. Some of those watershed groups actually built relationships with their local conservation district, and it's been a really strong alliance. It's worked really well where those doors have opened. But there was a time we had a meeting here, and I asked the group, so how many of you relate to your local conservation district or know what a conservation district is? And it was a surprising number of people that didn't. And it probably won't be a comfortable annual meeting. And I think you need to really, you need to choose your words carefully. You need to understand your vocabulary. You probably don't want to come right in the door and talk about water or talk about the environment, and God said don't talk about climate change, but listen and see, like, who are these people? Is anybody even going to make eye contact with me? And then, but don't have super high expectations. It'll take a couple of meetings, and you might have to offer to make coffee or something like that. But conservation districts are also, there's I think 70 some in Colorado, and they are arranged as watershed associations. So they do meet from time to time, as like I'm involved with the Upper South Platte Watershed Association, which is made up of 15 conservation districts. They're always looking for somebody to speak at their meetings. And content. And so I really, really encourage those relationships, and maybe we can help each other in that way. And it's a great way to get to know the lane. I mean, we have a divide. We have a divide where urban and rural people are really not understanding each other at all. We're not listening. But I think that conservation districts are kind of a neat place to start.
Just with what Casey mentioned, oh, okay, I might be drawing a blank. Oh wait, conservation districts, yes. And yeah, I think that, what is it, at the end of November, Colorado Association of Conservation Districts, and Abby Gray, their director, she's here at this conference. They hold their annual meeting. And that's a great place to go and meet. You honestly meet the more active conservation districts all show up there. And one thing is that in general, a lot of these conservation districts, they're very well, some of them are just very enmeshed, and they understand the NRCS system, which is not easy at all. I mean, like recently we were dealing with this where we had some landowners wanting to do some stream bank stabilization projects. And this is an NRCS practice. And it is such there's such an emphasis on this. If you have a landowner come in with a stream bank stabilization practice, it's going to get funded 100%. NRCS currently has 3 people statewide that can do the design. So it's going to sit there for 4 years and do nothing. And that's a whole other problem. But it's just, wow, this is, in terms of funding, this is a piece of cake. It's just, they don't, that's a group that we're really trying to figure out how to engage more, is the NRCS.
I have kind of a question. I think it is a question. It's a specific workshop request for future something or other. I want to learn how to run meetings. I don't have any idea how to run meetings. I'm not really comfortable speaking in public. I don't really know how to summarize what I'm trying to say, etc. I've been to a lot of meetings. I know that I need to send an agenda. What are the expectations? What are board members? What do they most care about? I had a meeting the other day that I was helping to run. We got done half an hour early, and it felt like such a win. Should I schedule meetings longer then so that board members are happy when it ends early? Like, I just would love some tips on real basic things, because I wasn't a secretary at New Belgium and I don't just understand those things. And I also would like to learn, I think that there's value in kind of arising from some of the more ground level duties. And as somebody who's kind of in that position now, I'm not comfortable then being like in charge. How can I gain some of those skills and understand how to fully utilize the people that I actually want to hear from without taking up the space myself, but make sure that it's efficient and that it's actually helpful and not sell myself short? So those are the questions. But also conservation districts. the Eagle River Fund and the coalition received funding from the 7A partnership. Oh my gosh, what is it? Community funding partnerships. It was just an example of coalitions. But I do have another question there because we had 6 partners that came together. We received funding for a Beyond Lawn program to remove turf since it's such a thirsty plant here, especially in the Eagle River Valley, and replace it with a demonstration garden of native plants. And so this was a conservation district, CSU extension, Beyond Master Gardeners program, pairing with our organization, the Eagle River Coalition, to do this project. It's really, really cool. We have rebates and demo gardens and all kinds of stuff. The Eagle River Fund, as one of its early projects, decided also to contribute some funding. And then it was on a private piece of property that was in a CDOT easement along a highway. And so we're like, okay, great. Everybody's on board. We have HOA funding, Metro District funding. Like, this was the coolest thing. It was 50 grand. We had a design that was donated some reason, even though we had funding. And we didn't have anybody to lead the stinking project. And so I was like, cool, well, this can't be too hard, and just did it. I'm not a project person, I'm a development professional. How do you assign somebody to step up and do this thing that everybody's on board with, but you don't have a leader? Because I just had the land trust last week ask why they weren't part of it. I frankly forgot. So I'm just wondering, with those kinds of projects, everybody knows is a good idea. It's already funded. We just need to get the thing done. How can you set up a system so that it just happens when nobody has time?
So I heard 2 questions, and I'm glad you touched on this because the concept of a corporate secretary, like, I know what I do sometimes. I know what Diane is so great at, and is that kind of a role. So can you kind of hold that in your brain? And then the project champion concept, that's when I will, maybe if we have time, I'll talk about that a little bit because I got some really good advice on that. And Melanie, I don't really think you have to worry about your ability to lead a meeting. And I think that you're quite articulate, and you just jump in there and do it and be authentic. It's your style that carries forward. So, people just enjoy that you're showing up. And it's like Mark Twain said, they didn't know it was impossible, so they just did it. Corporate secretary.
Corporate secretary. Thanks for the reminder. When I was corporate secretary, they referred to me as the quarterback, because I kind of intersected with every department. And really, I think about executive directors of organizations as just being the quarterback of an institution. You're kind of watching the field in front of you. You can see where different things are at. You are able to have touch points in every initiative that the organization is going through. And it's your job to tell the board what the plays are, what the options are, right? And I think that I'm trying to remember some of your questions. And leading meetings too. Okay. Yeah. I would just say it takes repetition. Greg, I'd imagine you can relate with this, of just years of meeting with farmers, and like what it takes to build trust is just practicing what your points are and seeing how people react, and just repetition. I see this with fundraising calls of people that are trying to meet new donors for their organizations. And I always recommend pick the ones that you know are going to say no to you first, and go call them, because there's low expectations, and you get a chance to just work through your monologue and your points. And by the time you get to the ones that do, have better odds or are more meaningful to you, you've kind of got some of that experience under you in those repetitions. And I think it's the same for leading meetings. I benefited a lot by just being in the room of these executives and just getting to observe how they thought about things. And that, fortunately, I was in a company with strong values. And so I learned well, because there was a really strong guiding light into how we worked on things and what we thought about. But when it comes to facilitating a board of directors, I think that consistency is important. Hillary talked about this in your financials. I think just even in your agenda building, it helps people know what to expect as far as what points of conversation, what that'll look like, and how they can prepare to show up. I think creating both learning experiences in the boardroom and in the field together go a really long way, because that way everyone's kind of coming along on certain subjects. On CPRW's board, we also got to the point where we really had to focus on what's with the time that we have, what's the most important thing we need to work through right now. And doing project updates on everything the organization is doing, that doesn't work. And we actually started to implement interim board meetings that were optional, that if people wanted the project updates, they could come and show up to that virtually. The executive director would run through all the different projects, but the board meetings that were in person, when we have in-person time together, that's when we need to work through the hard things. And so making sure that you prioritize that on your board agendas, and the rest of the project updates can come. But what's the work that you really need to get out of your board, and making sure that that ends up in your meeting facilitation. But otherwise, the public speaking, it's reps too. It's just, yeah, you just gotta get out there and just like, I don't know, let go a little bit of, I'm not going to be perfect, and I'm just going to stumble through this, and I'm going to go home at the end of the day and be like, well, I tried my best.
And I have my hand up.
1 second, Diane, we have a question in the room.
Okay.
Good morning. This is Cheryl Swellick. I work with River Network, and my organization works to equip groups and organizations with knowledge and capacity to plan, to assess, to design, and implement projects. And I also do have some resources. I have a lunch meeting, so I have to run, but I'm going to leave you my card. I would love to give you some resources just to follow up on how to design and facilitate a really good meeting. But just wanted to share that.
Thanks, Cheryl. Diane, sorry, Cheryl had to leave, so I wanted to get that question in, or that comment.
That's great. I appreciate everything that's being said right now. I serve as the recorder for 2 different roundtables at the moment, and I'm a project manager for 2 different 208 management agencies, 1 association, watershed group. So I really feel for that, all of these questions that come with creating agendas. Just a couple quick tools that help me is in remembering that it's not my agenda, it's the members driving the bus. On several of my organizations now, I have implemented agenda setting meetings with the chair and or vice chair of all of those organizations, because they want me to succeed, meaning they want you to succeed, and it gets buy-in to get them to be telling you what they want on the agenda, essentially. I mean, you go in there, you don't want to make stuff up. What does the membership want to do, and what do they want to hear? So one of the first things I implement when I start with a new organization is having them set up virtual, some online. One of them is a call-in, but I put together a very rough outline, and then we fill in the blanks together online for each agenda. And I do that a week and a half in advance to 2 weeks in advance. And then I release my agendas 5 days in advance for anybody who wants to add something to the agenda from the membership. But it's a great way to develop a relationship with your board, particularly the chair and vice chair, and they rotate. So you get to know everybody eventually. But those agenda setting meetings are critical, I think, to keeping the meetings pertinent and informative. I twice a year for 2 of my organizations, I take them out on, I set up site visits so they get to go see the work that's happening in the field. So I'll set it up like we recently went to Henderson Mine and got to visit their, water treatment facility, or we go to a project site that Trout Unlimited just, finished a project on. So we go out in the field at least twice a year to give them, kind of like, these are the good work you're doing, and this is what it looks like. I don't know if somebody mentioned that, but that's just a great way to get the members engaged. And if you ever want to, I can give you templates. I'm happy to sit down with you at any time, because I do work with several watershed groups.
Diane is a master at her job and gets my highest recommendation. Well, the old clock on the wall says it's 11:27. We're going to wrap up. Evie has been busily grouping comments, thoughts, and ideas, and she's just going to share this with you, and we'll talk about where we might head down the road.
Thank you all for taking the time to work with us in telling us your needs, where you feel like you're lacking the support, and helping us really design and figure out how we can best support you. So I'm just going to run through quickly what my understanding of what we should be focusing on for future workshops and future projects. And then you guys can let me know if I'm on base or not. We'll do a thumbs up, thumbs down, so you guys can get on with your morning. One of the big things that I heard was that we really want to know what are the benefits of going 501c3 or using those fiscal agents. What are the benefits and purposes of the fiscal agents? How do you navigate those policies of fiscal agents, but also how do you navigate the transition if that's what you're looking for towards that 501c3? What are the opportunities, funding opportunities, or contractors or whatnot that can really help benefit you in that transition? Another one was, how do you get the board engaged, not only within your organization, but also within your financial capacities? What is the best way to present that information to you? How is having that information shared going to benefit you with audits or come grant writing time? And then another one is, how do you create those relationships and those trust currencies? So whether that's relationships with your board or relationships with other organizations you'll be working with. What are some avenues of looking for those relationships? What are the benefits of some of those relationships? And then more so just running the not so fun parts of your organization, keeping those ducks in a row. How do you have those agendas? How do you have that buy-in within your organization with the materials you're providing and supporting everyone with? And how can you find support in helping you with that? How does that sound? Does that sound about right? Yes.
I would build on that last topic, that you could talk about board governance as well as the agenda structure, and the leadership structure and subcommittees. I served as a trustee for Colorado Mountain College for 8 years. And when you go to the national conferences, there's 2,000 to 4,000 people there from all the different universities in the country. And the main topic that is discussed is board governance structures, because there's so many subtle but very important nuances that could be very interesting to people.
Mm-hmm. So thank you. And again, we are at time. We need to flip our rooms and be ready for the plenary this afternoon. But please know you will be hearing from us. We're going to compile this information, share it out, get your feedback, share it with our virtual audience. We're going to confer with our sponsors here, the Mighty Arrow Family Foundation, the Colorado Nonprofit Association, and we will be in touch. Thank you for your attention. Thank you for being here.